Hey everyone, stick with us versus Herd. If it's your first time here, like the content, hit subscribe. If you want to get notifications for when we go live, tap the bell. We go live 30 minutes before market open, Monday through Friday. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. If you're here right now, say what up. Good morning. How we doing? S&Ps are up 15, Dow's up 99, NASDAQ up a whopping 90, which is leading the pack here. NASDAQ right now. What's going on? Keith, Andres, Faiz, Jeff, Gino, Hank, Jesse, Reggie, Kelly, Dut, Tan, Lucas. Good morning. If you guys could do me the favor, hit the like button. I would appreciate it. I'm trying to fix my chair here. little low for some reason. Okay. All right, we're back in action. It's pretty surprising to me that futures were red last night, and I guess it's not that surprising. And then we basically ripped from like the 2750 area all the way up to 2848, and then we sold off again, and then we came back up to 2800. This is a 100-point move. I mean, actually, this was not last night. Hold on, sorry guys. This 2750 to 2800. I don't know. I gotta wake up here. Hold on. We had a 60-point move, about a 60 to 50-point move here. 60 to 50 point, not a 100-point move. Excuse me. It went from 2760 to like 2810, and now we're at 2791. SPY is trying to retest the 280 area right now, so pretty crazy. We had the jobs numbers. Verizon will buy video company Blue Jeans. I haven't even heard of them. Blue Jeans. Weekly jobless claims 5.245 million. Versus an estimated of 5 million. It's kind of interesting that we have the estimated is now 5 million, versus a few weeks ago the estimated was like 300,000. Now estimated is trying to turn off some of these alerts here. Estimated is now 5 million. I mean, it's crazy. We're at 22 in 1 month. We're at $22 million unemployment, but it's okay. It's okay. They sent everybody money. It's gonna last them. It's gonna last them through the depression. Yo, Eric, what's going on? If you're just joining, say what up. So, protection measures against the coronavirus continue to tear through the employment ranks, with 5.2 million more Americans filing first-time claims for unemployment insurance last week. The total was a bit worse than the 5 million. 22 million, nearly wiping out all the job gains since the Great Recession. So, in 1 month, we just wiped out the last 11 years worth of job gains. I mean, it's insane. Yo, Lemon, what's going on? Carl, Carmine, Mr. Morris. In 4 weeks, almost wiped out 11 years worth of jobs. A slight move up to make some money. Looks like it's moving up a little bit. What's going on, Trevor? How we doing? So that is just insane. U.S. housing starts also this morning, so this is not good. U.S. housing starts down 22%. So groundbreakings occurred last month. 1.2 million down, 1.56 million pace for February. In February, so housing's down. I mean, everything is going to go down for a while. We're just gonna have to get used to these kind of reports and trade accordingly. Could have expected that in a lockdown. Jobs. How can you get work? How can you go to work? Get your things done. Yeah, no. I mean, yeah, we're on lockdown. We knew it was going to be bad. We knew that we're going to be in recession. I mean, you don't need the data if everybody is locked in. Is this confirmation? If they were like, oh, only 200,000 jobs, only 200,000 people filed for unemployment last week, they would have been like, people would have been like, no, that's not so bad. That's not so bad. Or even if we had like, oh, only a million people filed for unemployment last week. Like, oh yeah, that's fine. We don't. That's actually way better than what we expected. We were expecting 5 million, 1 million. If we had 1 million jobs, just think about this. If we had 1 million jobs lost in a week, the market would probably fly to 3,000. Like this S&P would be 3,000 right now. I mean, just insane. Couple things this morning. Wonder if Sweden lost any jobs. Yeah, I don't know. I mean, who knows? I mean, Sweden's on a different level in general with their entire country, you know. So, Morgan Stanley. So I did trade Morgan Stanley earnings. Of course, like everyone else, profit falls short, but the trading was up. Bank said earnings dropped 30%, which is not as bad. 30% is not as bad as like JP Morgan, Bank of America. Everyone was reporting like 50%, 46%, 45%. And this is 30%, which I mean it's pretty damaging. And we came in at $1 a share versus $1.14. The trade that I have on right now for this, I was up a little bit of money at the close, but we'll see what happens if it eats into my profits at all. But if we go into Morgan Stanley here, what I have on for today, I shorted a call spread. I have 3 of them. And like I said yesterday, instead of doing 3, I probably should have just made it this wider, save a little bit of money on commissions. But hey, it is what it is. After I put the trade on, I was like, I should have made, instead of loading up 3 of these, I should have made it wider. What I was looking to do was having the credit spread cover the cost of the put. I did receive a small credit, like 25 cents or something like that, 20 cents. What was it? Yeah, 26 cents. So I received a 26 cents credit. So paid for the put. So right now I'm in the money a little bit. Morgan Stanley is down about 90 cents right now. So it did drop down to 37.05. If it comes back down to 37, that would be ideal position for me. But if we open up around here, let's see what we're gonna be at. So if we open up around like 37, let's see. Yeah. And let's say we take a 30% Ivy Crush. We open up. It's not telling me here. It's kind of broken. All right, if we open up around like 37.5, we're gonna be making like $100. It says. So actually good play. If we open at 38, we're gonna be making like $41. So, we want to be below 38, obviously, because we're gonna have. Oh, now the numbers are loading. Now that put's gonna be working for us if we can go lower. Like if we go down to 37, this was like $150 right here versus 38. We're gonna be at like $50, $47. So, but the good thing is, it did sell that credit spread. That thing should get crushed pretty good, and the put's kind of like a freebie. So that's kind of what I was looking for. I knew it was going to go down, but I didn't want to just buy puts outright. I wanted to kind of cover the cost of that put, and that's what I did. And I was up. I do have a $50 cushion going into today, but that might be eaten due to the IV crush, implied volatility crush. So, ideally, if we can come down to 37, would be ideal for me if we can kind of revisit Morgan Stanley lows here, but. We'll see what happens. Right now it's moving up with the market. Goldman Sachs I'm also short as well, which this is at 178. It's basically flat. Closed at 178.52. Currently 178.52. It did hit 176 after hours last night, but that doesn't really mean a whole lot. If the market rips up, we have the NASDAQ. Not that it relates to the bank, but NASDAQ is just ripping this morning. Qs are probably up ripping pretty good too. Naked Tasty, what are the 2 dash lines in the analysis view and how do you change it? The dash lines. What are the 2 dash lines? Oh, Okay, these vertical lines right here, that into this implies one standard deviation move, and then the wider dashes out here is uh, a second deviation move right here. So first deviation, second deviation move. It just kind of you can't change it. It's calculated based on options pricing. So it's something that the system generates from the so yeah, we got the standard deviation, then we got the second deviation right there, first and second. Yep. So yeah, you're at 33. First standard deviation move at 36, because the expected move Morgan Stanley was expected to move like $2 outside of the expected move, and that's where the standard deviations start to come into play. Outside. When it starts going beyond the expected move, this is when the standard deviations come into play. Which you're going to get really cheap options in here in the standard deviations, but they're not necessarily going to be profitable. It's unlikely for it to go beyond standard deviation. But not saying it won't. I mean, this is a crazy time. I mean, it goes beyond all the time, but I'm just saying the likelihood is less likely. That's why I kind of line up my trades to be within that standard deviation. Yo, Ariana, what's going on? Goldfish, what's going on? I was wondering if I can go long in bank soon. I mean, I mean, if we're looking at like XLF, the financial sector here, this is at 2165. It's basically flat this morning. Banks are a little bit flat this morning. Bank of America is moving up a little bit, but I'm thinking if we can get XLF down to like 20 again, might be a good entry. But we'll see. I think the problem that I have, it depends on how long you're looking to go long for. The problem that I have is basically what JP Morgan and the major bank said yesterday, is that they are preparing for basically battle. They're moving money around because of they're expecting massive amounts of defaults across their businesses, which means mortgages, auto loans, and credit cards, and any other loan that people have, personal loans, stuff like that. So that is why I'm a little bit skeptical. I mean, I think the banks are going to be a good value eventually, but we're at the forefront of what's going to happen. They're going to be going through some hard times right now. I would say, we've made it through lockdown. Lockdown for us, we're just above 30 days right now in Illinois. Lockdown started, I think, the second week of March, and then we're minimally, Illinois is locked down until April 30th. So we have a shelter in place till April 30th in Illinois. Now, I don't know, like they were saying, the coronavirus task force was saying, people can open up and stuff like that. Some can open up immediately. Like, I think Illinois is probably going to be on the bottom of the list for opening up. I mean, maybe we'll hit the 30th target and open up on the first. I don't know. I mean, I would like to see people get back to work. I'd like to see people doing things again and, moving the economy and all that. But, I don't know. I don't know what's gonna happen. I honestly don't know. Whatever we can do to be safe, keep people safe, keep people employed, I think then that's good. I mean, I think I went through the McDonald's drive-through yesterday, and they actually have a lot of precautions. Like, they now have like a little like plastic window, so you can't like talk face to face and like be like, so you have to like put the money underneath the window, kind of like back in the day, like you're at a currency exchange almost. And all the employees had masks and gloves, and I feel like they were being safe for their employees there. So I don't know. Nobody knows. But I mean, to answer your question about the banks, I mean, the financial sector does look to be bottoming out here. If we can drop below like 20 to 21 area. However, just be mindful, like investing long term, we're going to be fighting some battles here. The banks are, especially. People don't have money. Yo, Rohan, what's going on? I think I missed some questions here. Boeing. Let's talk about Boeing real quick here. Boeing, Netflix also got upgraded by Goldman Sachs. Boeing, Boeing, I wouldn't call it a recovery. I mean, it ripped huge. But if you're looking at the 1 year chart, you could barely tell anything even happened. I mean, yesterday, yes, we had an amazing V-shaped recovery. We dipped hard red, came green. But if you're looking at the 1 year, if you're like swinging, you wouldn't really have noticed that anything really special happened yesterday. We're basically, it bounced at the bottom of the range. So it looks like if we can come back up to like the 155 area, I would be watching for like a short. If we can come back down to the 130 area, I'd be looking to go long. The one thing that I do like about Boeing is when it gets into ranges, it's extremely profitable. So if Boeing can find a range that we can trade options in, it's going to be extremely profitable. I mean, Boeing is a mess with the 737. The travel sector is way down. I mean, Boeing as a company is garbage. You just got to trade. You just got to trade the chart and really hope for the best. Just concentrate on the price and your trades and keep realistic. A lot of people, what I notice, like when it comes to stocks these days, is like, oh, I'm gonna buy down at 90 and I'm gonna hold till it gets back up to 300. It's not happening. It's not happening. Maybe it could push 180, 200, but don't be greedy. You have to set realistic expectations for your trades. You can't just be like, oh, I'm gonna hold it because it's gonna be 300 next week. Like, that is not a realistic expectation. Chewy, yeah. We haven't had just so you guys know, we haven't had a red Thursday in like a month. We haven't had a red Thursday in over a month. But that always kind of trips you up, because then you're like, is this the one? Is this the one that's going to be red? Because like, oh yeah, you don't want to like load in too much. You don't want to load up too much long, and then like, oh, this was the one that they cared about the jobs report this morning. Oh, now the market's red. Like, you don't want to be that guy. I didn't want to be that guy, so I didn't go too long. I'm just gonna be looking for a day trade. Netflix as well. Netflix. So people. Here's the thing about Netflix. If I've been trading Netflix for a very long time, and Netflix is one of my favorite stocks to trade. It's wild. It doesn't follow the market. It also gives you like a nice breather to, like, if you're tired of trading other things like Apple or SPY, it gives you a nice change of pace on Netflix because it doesn't follow the market. Netflix kind of just does what it wants. Obviously, market's doing really bad right now, and this is pushing all-time highs. It made new highs yesterday. Just insane. Had an incredible V-shaped recovery, But the thing is, Netflix is always overhyped, and it always runs before earnings. Always runs, no matter, always. If it doesn't matter if the stock is going to drop beforehand, or like if you look at this run up. So earnings was here like back in July here. Earnings ramped up for a good while here. We ran up before earnings and then it dropped hard. I would be mindful that we might have a couple red days here, people trying to exit their positions before earnings, kind of like in here. And if you look at this one, ramps up before earnings, pops on earnings, and drops hard. Here again, this one's not as bad though, because it was ramping before. We had a ramp before the earnings, so it was consolidating. But Netflix usually ramps, so that's why it's a very low, like for me, it's always a low risk trade to play the ramp up. I pretty much every quarter trade it. I trade a ramp up into Netflix, especially if Netflix has had a pretty big dip. Like if you're looking at a big dip like this and a ramp up into earnings, and that's kind of what I look for. This was a bit bigger dip and I didn't really buy it, but I have been trading the last couple of days. This week so far, I'm up a little bit over $500 just day trading Netflix and not doing it, and honestly not doing anything risky. Just buying a call, holding it for 20-30% and cutting it loose. Sure, we left a lot of money on the table, but we traded it safe, and it was a relatively safe stock to trade right now. Yesterday got a little bit bumpy in the afternoon, but it did create some support here at like the 425. As you can see, it bounced off 425 3 times, so, or 4 times basically, if you want to call this dip here. But that's what I like about Netflix right now. I mean, there's people. This is why I started this channel, and this is why we're called Us versus Herd. And sure, it can be done. It can be done. It happens. But people, when they see charts like this, they start getting really, really hungry, and they think they're going to be rich overnight, and they think all these things. For me, I use this chart as basically, basically to trade safely. People see charts like this and they trade more recklessly. They'll put more money in. They'll let it ride a lot longer because they think that Netflix is going to go to 500. But then this is what happens. It ramps up. And I put my position yesterday. I bought the 430 put, right? I bought the 430 put. I traded this very top right here. I just traded this top zone from 430 to 434. Was a really nice move. I just traded it from 430 to 434. Now, when you enter here, and the main reason why I entered here is because we broke the this double top over here at 430. It broke through and it was pushing, and I was up my 20%. I think it was up 20% on that trade, and people are like, oh, this is going to 430, 450, 445 to like now, right? And then it falls like 10 points, and then you sell for, instead of taking repetitive gains, you then get nervous that you're like, oh no, this is going to fall down to 420, I'm nervous, and then you lose money, and then it recovers, and you're like, oh, if I held, that would have been okay. And and that's why I trade the way that I do, is I don't try to push the limits. Usually when you push the limits, you get burned. You're operating a car going 200 miles an hour. Of course, you're going to crash eventually. Take the profits, find a better entry. Isn't it better to take the profits on this run when it drops? And the thing is, like, people always like, oh, it may not ever drop. It may not drop today. It may not. But do you want to take the chance? What if it does and you have a better entry? Like, for instance, this provided a good entry. It dropped here, bounced at 425. You could have played this back up to 430, and then it pushed up to 435. So that's what I would be looking at for a trade, and that's why when it comes to options trading, it's a business. People just try to gamble, and when you get setups like this, is like, oh, I could have turned a dollar contract into $15 if I just held from Monday through Friday. And yes, you could have, but if you knew that, you would have done it. If anyone knew that, everyone would have done it, right? You would have been rich. You would have been a multimillionaire the very first week you traded. You would never have to need anything again if you knew what the future held. But we don't know. We don't know if Netflix is going to crater. We don't know if it's going to go to 500 that afternoon. We don't know if a report comes out while this thing is running. We've seen it many times before. Or things are running hard, doing what you want to. A report comes out, and just like that, you instantly lose your profits. Like, you don't know. You don't know what's going to happen. So that is why this is a really good example of why I take my profits. There were a lot of people that didn't take the profits that were holding, and they, that's on them. And that's I've been burned many times. And I know that for Netflix, you're going to get two-sided action. It's not just going to go straight up, and this is what people worry about, is like for Boeing, for instance, if you're looking at Boeing, they bought the dip. This chart looks way different. Oh, if I just held, you don't know. You don't know if this leg here, when it went from 132 to 140, this leg is going to crater back down to 130. You don't know. So that's why it's good to use, defined risk and make sure you're not rolling too deep, because that's how you blow up your account. If you guys can hit the like button, I'd appreciate it. And if you're just joining us or you've never said anything, comment below. Want to get to meet you. Say what's up. Say what's going on. Jason, you're so right. I hate the feeling, because I have also a small account, so everything has to settle. Yeah, I mean, especially if you have a small account, you should trade safely. People just try to, oh, I want to turn my 500 into 1,000 and 1,000 into 2,000. I have this master plan. I have this. I have that. But the market doesn't care about your plans. The market's going to do what it wants to do. So, what's going on, Jesse? Yo, Nate, how far did you go out on that Peloton 37 put? Oh yeah, so last night I bought a Peloton put 37. We'll talk about Tesla in just a second. I bought the 37 put. I actually have it for May expiration, so I got 30 days, now 29. So Peloton right here, the 37 put, and I got it for Peloton. It cost me 520. So it looks like Peloton's down a little bit this morning. I just thought that we're coming up on resistance here. Maybe it'll push out. I did set alert to alert me at like when it breaches the 37 area. I'll probably cut losses around 38, 39. So we'll see what happens. We got time. Tesla this morning. Oh, it's down like $8, but it doesn't. It doesn't look like it's down $8, honestly. Definitely doesn't look like it's down $8. But had a crazy run. I think that it's gonna have some difficulties around here, around 800 area. So we'll see what happens. I mean, Tesla. Like if we get rid of this chart here, let me just go back to the 5 years here. Let's get rid of this run. Okay, let's get rid of it. So if we get rid of it, what you guys do notice that Tesla is a very range bound stock. When it starts trading in a range, it trades in a very wide range, but it is range bound. So as you can see, like 380, significant resistance here. 380 when we were trading it back in 2017, 2018, even in 2019. 380, pretty big resistance. However, the 280, 275 area had really strong support. So it basically traded like this, and that's what I think it's looking like it wants to do here. Even though it's taking massive swings, but it's nothing new. It's always done that. The swings are bigger now because it's a $700 stock and not a $300 stock. Talk about Apple. Okay. Mr. Moore's been driving 400 miles per hour. Yeah, Apple is now above the 50-day and holding. Let's see, it's at 287. So, they had news that they released their iPhone. They're releasing a new iPhone, and that's why it's moving up. So usually those are kind of a sell the news event. So we'll see what happens. Usually the new iPhones and stuff are a sell the news event. So if it can push up here, I mean, I want to push up to 300 to short it again, but we'll see. We'll see what happens. Apple has a lot of momentum right now, but if we can get up here to the 300 area, I'd like to try to put on a small short position and trade it back down to like the 270 area. That's what I would like to do, but we'll see. Right now, market's relatively flat. S&P, we're opening here in just a few seconds. S&P's up 13, Dow's up 48, Nasdaq, strongest of them all, at 82. Peloton, that should be a good trade. Aaron sold 700 Tesla call that expires 424 last week for 180. Cut my losses Monday for $20 loss. Sorry, man. That's what I mean. That's a wild stock though. So you got to be careful. Like if you're trading too big, like that's the kind of stock that's gonna trip you up. Okay, so looks like on Morgan Stanley, looking like we're coming in at 38 right now. So I think I can take off my credit spread here and just ride the put. Because we're up pretty good on the credit spread. Let's get out of here. Let's try to get. So then we could ride the put. We could ride the put for free if we can get out of this. So far, not filling because it's spiking up. Yeah, Morgan Stanley's spiking up a little bit. So let's see if we can get out of. So we're up about $50 on that. Let's see if we can. Maybe we'll just take it easy. Take it easy. Let's see if some contracts trade on this, because I don't know. Let's see how many contracts are trading on Morgan Stanley right now. Yeah, liquidity is not great. I need some more contracts to be traded. Bid and ask is kind of wide this morning. You know, they have pretty good open interest, but liquidity on Morgan Stanley is not great this morning. So we'll see. Puts are actually volumes decent on. Call side not so good. I'm trying to close out my call spread. So see if we can get it. It's taking a little bit of a dump here. Let's see if we can close out this call spread and then ride this put for free. That's what I'm talking about. Let's close out this. So still no fill. Let's see what is Goldman Sachs doing right now. Goldman Sachs is up 178. Seb, this is Thinkorswim. I'm also trading in Tastyworks right now. Trying to get out of my spread here. So I'm up in the spread, and I want to take the money. I'm gonna ride the put. But premium was crushed pretty good. Okay, so I finally got a fill. The weird thing is I put in, so I just got filled on the spread for 19 or I actually got 20 cents. Actually, that was right. I don't know why it said 19 cents on the screen, but looks like I got filled for 20 cents. Got filled for 20 cents, so we covered the cost. Basically, almost. Well, I only got $54 profit on there, and I think this cost me like $80. But I'm up currently on the put. So I'm just gonna ride this put here for a little bit longer. I did take in my credits, so let's see what happens with Morgan Stanley. Right now, I'm in a good position, so I think the put I paid about 80. I paid about 80 cents for that, so I made $54. So that put, you know, is gonna be that put's gonna be like 25. That put's only cost me like 25 cents right now. So my risk is 25. So that's good. So if we can get the banks to go lower, sold my call spread, collected $54 from the call spread. That's actually decent play, good risk reward. Hopefully we can drop a little bit lower. Obviously, I would have liked it dropping to be at 37, but like I showed you guys earlier at this when I started the live stream here. But right now Dow's actually down. Dow dropped. It's negative now. So we'll see if we can get this put working. So I closed out that call spread. So I had the Morgan Stanley. I just closed out. I had the 39, so I was short 39 in the 40 calls. So I was right at the money. And now I just have the 38 put. So I was short this spread right in here, and now I just have this 38 put. So we're gonna ride that for a little bit longer. Looks like this is break even this put. So we'll try to make a little bit of money on that put. We'll see what happens though. We'll see what happens, you know. But I'm glad that I sold that spread so I can get some money, basically paying for that put. You know, didn't necessarily come out to like an exact free trade, but I've lowered my risk. So instead of buying a put for $1, now that put only cost me 25 cents, and I'm risking $25 for a bigger play here. So that's what the goal was. You know, basically I wanted to sell the call spreads to cover the cost of my put. Obviously I didn't hit the target exactly, but you know, we came close. 25 cents, I'll take it. Yo, Joe, FedEx. Let's take a look at FedEx. FedEx was upgraded, and if you guys are not part of the Discord, just to kind of point it out here, you know, things that I did build in some bots. So under Stock Market News, we have some bots that'll give you Pricing, upgrades, downgrades. I have an upgrade downgrade bot, automatic, doesn't cost you anything. And earnings bot. This will also post all their earnings news. So you can have, what I was looking to do is start having all this information coming to you, and versus you going to look for it all. So that's why. So stock market news, upgrades, downgrades, and earnings. I'm looking to make things better. But right now we have basically all the news coming in for earnings, trades, upgrades or downgrades, and then just general stock market news and financial news comes into here. So, it's a nice little tool. Yo, Daniel made 50 on MS. Nice, man. Nice. All right, we got Goldman Sachs. Come on, baby, drop below. Let's revisit 170. Come on. I got the 175 put, making some money back on it, but I'm down 100 on it still. So we'll see what happens. I may need to sell some call spreads on Goldman Sachs to pay for that put on that I bought yesterday. But yeah, looks like things are kind of going a little bit lower. So I'm gonna hold on to that 37. I'm gonna hold on to that 37 put on Morgan Stanley. Right now, Peloton is back up to 35 Peloton, so I'm down $5 on that position. It's ripping up. I was up a little bit. It came down to 34. I was up a little bit, but we'll see. We'll see what happens. Does Webull show expected move for the day? I heard you say that on Tastyworks. So it shows in the options chain on pretty much all the platforms. So if you're looking at the options chain, here's Thinkorswim. It shows on Tastyworks. But if you're looking at the options chain, you'll see this like plus and minus here. I know it says implied volatility. Implied volatility is that percentage, but next to it says plus or minus 2.22. That means it's going to be plus or minus $2.20. So the option pricing is calculating plus 20 cents, plus $2.20 or minus $2.20 from where the stock is currently at by this expiration. So right now Peloton's 34. Option pricing is saying by Friday at expiration, the expected move is $2.20. So it's expected to go up to $37 basically, or down to like 32. Man, Dow's getting hammered. Dow's down to 120. Jeez. Dow's revisiting its overnight lows. Holy smokes. It's getting killed. Getting killed. AVGO. Oh, here we go on Morgan Stanley. Little drop. That's what I'm talking about. I'm gonna hold that put. AVGO. Let's see here. Yeah, they're kind of all over the place. But I mean, it's leveling out here like 250. So if it comes down to 250, but looks like it's pushing up, pretty soon the range is going to get tight, and as you can see, it's developing like a triangle. And when a range get tight, it's going to explode to the downside or to the upside. So just be mindful. It looks more like upside. Looks like it wants to push up to 280, but just be mindful. It could get rejected too. All right. Goldman Sachs, that's what I'm talking about. Give me my money back. All right, so this is the current situation this morning. This is the current situation. So Tesla, I think this is dead. I think I've been bag holding this because the only reason why I've been bag holding Tesla is because it's been max loss. I sold the call spread at 620, 625. I should have cut it a long time ago, but it just moved too quick. So I've just been bag holding this, but I don't think we're dropping. I needed to drop another 80 points. I needed to come down to like even 650 on Tesla. If we can get, let's see. Let's do some calculation. Let's do some analysis. Let's see. What do I need? Tomorrow. Now, I'm going to be risking assignment is the thing. So tomorrow, I basically to cut my losses a little bit. I needed about 640 to start getting back, or I need 620, which I don't know if it's going to happen. Could happen, but probably not. Probably not. Costco, I have a spread on for next week. I was actually down about 150. Now I'm only down 60. Started to come back to me, but now it's going against me a little bit here on Costco. basically trading. I'm basically trading on Costco right now. This rejection area. I mean, this could pop up to 320 and it could get screwed. But I'm just this is a chart play where I'm just playing resistance right now. Costco, had a bit of crazy two-sided action yesterday. Normally you don't get as much action from Costco. Normally it's a rather boring stock to trade, which is why I kind of like to trade it. Even though it's not as liquid, it kind of gives you a break from a fast-paced market. So Costco, it popped up to 315, but now it's down to 312. So we'll see what happens. If it comes back down to 310, would be good for me, going into next week. Goldman Sachs, I bought the 175 put. Currently down 175 on it. I got back $78 so far today on that, but we'll see. We'll see what we're going to do about that. My target is 170 on that put. Making a little bit of money on that Morgan Stanley put right now. And Netflix, I have a debit spread going into earnings. It's only worth $25 right now. Thought it was going to be lower, but we have till May on this, so we'll see what happens. Hopefully implied volatility goes a little bit higher next week. I could take this off and kind of realign it. And then Peloton, I'm in the May expiration, the 37 put May expiration. So it's going to be a slow mover, and that's okay unless Peloton just drops like a rock. But, we'll see. Peloton, that's kind of what we're looking at. Yo, Brooklyn, what's going on? So those are the plays that are in the fire right now. I feel like the market changes so much that I have to adjust my strategy every week. Yeah, I mean, you gotta adjust your strategy, regardless. I mean, you always got to adjust, and now we have earnings and all these other reports that kind of impact the market. So you just kind of got to move. I'm glad that earnings are in play right now because it gives me a lot of good opportunities to trade. I feel like the bank earnings we've just been hitting. The only bank earnings that we've lost so far on was Bank of America. I sold an at the money straddle and I lost $16 on it. It wasn't a big deal, but let's see what XLF is doing right now because that's one ETF I'm interested in, and it's down to 20. I closed my put out for 40% profit yesterday. It was like 21.61, so it wouldn't have squeezed out that much more juice. So we'll see what happens. I wonder if I should just close. Should I just close? I'm just going to close Goldman Sachs here. $37 loss on this leg down. All right, I did it. Okay, I lost $40 on Goldman Sachs, but I was down 200 on it yesterday. It's probably going lower, but we got the money back. Got most of the money back. Lost $40. We'll make it back on Morgan Stanley. Already made $54 back, so we'll see if we can get this Morgan Stanley put to pay out. Kind of offset that a little bit, And that's the thing though. Yesterday, I made $160 on Netflix. So I was down like 180 on Goldman Sachs. It did push up to like a $200 loss, but I traded defensively. I traded Netflix and I made a $160 profit, which covered Goldman Sachs's loss. So I'm actually, with pair trading Netflix and Goldman Sachs, I'm actually up 120. So I made 160 yesterday on Netflix to pair trade that. I'm down 40 on this Goldman Sachs trade. However, on Goldman Sachs, I did do an earnings play and made $87 yesterday on Goldman Sachs earnings play. So we're net positive, and that's the goal. I know sometimes it gets a little complicated, but in options trading, you don't have to sit there and just take the beating. Like you don't have to take it. You don't have to take it. Start thinking. That's why it's not good to use all your capital on one single play, because you want to have that capital. A trade's going to go against you. You want that capital to redeploy and start pushing, start playing defensively, and that's why you want to be able to move and adjust. And Morgan Stanley is ripping up pretty good here. Goldman Sachs not, but I'm glad I sold this drop though. I mean, dropped from 170 to 174. I was holding the two, and that expires tomorrow, so you don't want to mess around with that. You do not want to mess around with that. GTFO, you know what I mean? I like this week's SPY. Yo, Kevin, I trade weeklies and I trade monthlies and I trade bi-weeklies. I trade whatever I want to trade for the time frame that I think that the trade is going to work out in. So I have some monthly plays on. I'm trading weeklies right now. I had some plays on that expiring tomorrow. I just kind of close those out. I do have a Morgan Stanley put that I'm holding right now for tomorrow. But I made some money on that already. We're just we kind of do what we got to do. If there's an opportunity for the week, if there's an opportunity for next week, if there's an opportunity for the month, I don't let the time frame mess with my trade idea. Like Peloton, I have on for next month. Because I think that the trade's going to work out. I just don't know exactly when the timing is going to be. But for earnings trades, I trade more like on the weekly side just to kind of eat up some premium and then to get some cheaper options as well. So it really depends on what the idea is for the trade. Probably shouldn't have closed Goldman Sachs, but I wanted to be net positive. I don't want to be holding that until tomorrow. They really, Goldman Sachs kind of pissed me off because they really squeezed. Goldman Sachs was the only stock that was ripping up yesterday in terms of the banks. Goldman Sachs ripped from red to green. All the banks were a disaster. I mean, if you look at yesterday, even if you look down, Bank of America was down 6% yesterday. It's down another 2% today. Goldman Sachs should have been down at least 2 to 3% yesterday, and it closed the day up on the day. JP Morgan as well. JP Morgan got hammered. Luckily we made some money on earnings, JP Morgan earnings early this week when they had earnings, but they got hammered from, they basically went from 102 when they opened all the way down to 93, and now they're at 89. So I don't know what was going on with Goldman Sachs, but that's why I decided to hold. I'm glad I did hold though, because I didn't want to take a $200 loss on that, that's for sure. But we got out alive. Yeah, Netflix popped up to 443. What's Tesla doing right now? Looks like market. I mean, could this be a red Thursday? Are we gonna have it? I don't know. I don't believe it. We'll see. Tesla zigzagging. It does look like a good short though, but I don't know, guys. I think I gotta take a break from Tesla. We'll see. AMD flying off the handle here. It looks like it's gonna push 60, guys. But AMD is a stock that I can believe in. I think it's a bit extended here. I'd like it to come back down to like the 52, 50 area, but I don't know. We'll see. We'll see what happens. So right now, my realized gains for today kind of crappy, but I'm net today. I'm net $14 on my realized profits, but combining it with this week, I think we're doing good, doing well. Yeah, Bank of America dropping like a rock. Morgan Stanley kind of going up a little bit, but still staying under 38. So I'm going to hold on to that put, see what happens. Maybe I'll sell another call spread on Morgan Stanley to kind of suck in a little bit more premium here. But let's see, premium Morgan Stanley. Let's see if implied volatility's gone down a little bit. Implied volatility is holding pretty good, so could probably sell some more premium in there. In NIO, relaxing, slowly climbing. Nice. Yeah, Bank of America is looking like trash. Literally going back down to like the $15 area. Back in 2016, this was, $10. Yeah, I think the banks are gonna be a good short for a while, guys. That's kind of how I'm planning. Now I'm not saying like you just want to be short them every day, because obviously we are gonna get bounce backs. We are gonna get it to rip violently, but over the long term, it's going to be, banks are going to be a good short for probably the remainder of 2020. Any major pops, I'm going to be looking to short a little bit. And I don't really feel bad about shorting the banks that much either, because, you know why. MA. Let's see here. Let me get Yeah, it looks like we had a pretty hard rejection here at 270. And it's coming down to the 230 area. That's what it looks like to me. I mean, it looks really bad. Let's see, I never traded MasterCard before. I've traded like Visa, American Express, stuff like that. I never traded MasterCard. The volume's always been relatively low, but it doesn't look that bad right now. Volume's not terrible. I mean, not great for the weekly. Let's see what the monthlies are like. That is a monthly. Yeah, volume is not looking great, so you got to be careful. But looks like trash. Let's see what's Visa doing. Oh man, Visa. What about MX? What is American Express? I don't even know. I haven't traded American Express in a while. AXP. That always throws me off. AXP. Oh, thanks, Daniel. And yeah, all the credit card companies. I mean, might be a good. Let's see here. MasterCard looks like a good short. Let's see what Visa. Visa looks like a good short too. Visa's probably. Yeah, Visa's a lot more liquid. AXP as well. American Express is pretty liquid usually. Not as good. Looks like Visa is the most liquid out of all of them. So I might be leaning towards Visa. But yeah, the credit cards looking like trash. Yikes. S&P is just, as that flat was negative for a second there. Dow's down 171. NASDAQ down 65. I mean, just crazy. Is the market going to care today? I mean, what's it going to take? What's it going to take? Peloton's green. Yeah, looks like all the credit cards are taking a big hit. Yeah, Goldman Sachs probably gonna leave some money on the table, but I don't want to risk that. I don't want to take a loss on that today. I'm talking about a big loss. Do not want to do that. Let's see, where is SPY right now? So SPY 0.0%. Wow, flat. Doesn't look good. Doesn't look good, guys. Google and Amazon's up 60. Jeez, man. Oh my gosh. Wow. All right. There's no TA to be done here. Technical analysis. There's no TA to be done. It's broken through. That's it. It's over. Let's see, Uber's still hanging on. Facebook, what do you do? I haven't traded Facebook in a minute. Facebook looks like it might be coming up to some trouble here. A little resistance. Boeing's back down. Boeing's back down. Be careful trying to repeat what it did yesterday. I doubt that it's going to have like a V-shaped recovery, but you never know. You never know. Maybe it will. Maybe it will repeat, but just be careful. Apple, what are we doing? Apple's up. Microsoft is up. Doesn't look great though. Gapped up and fading. Microsoft gap up and fade a little bit here. However, Microsoft's pretty strong, up over 1% this morning. Pretty good. Disney, man, I should have bought that 107 put yesterday on what day was that? Wednesday. Oh, Tuesday actually. Jeez. Crazy. Amazon 2200 calls were like 17K. Trade of the year missed this week. Hey man, it happens. I mean, you don't know. Like I was saying earlier on the stream, you can't predict the future. Just do the best we can with what we got and move forward. You know, that's all we can really do. That's all we can really do. So, anyways, guys, I'm going to take off. I'll be in the Discord. As always, stay safe, stay green. It's us versus herd.